Wall Street closes a volatile session mixed. The Dow Jones and S&P 500 eke out minor gains, while the Nasdaq ends flat as investors await a raft of inflation data in the U.S. this week. All eyes on the March CPI print due tomorrow. Asian markets trade largely higher. The Kospi rises after its central bank holds rates at 3.5%. The SGX Nifty 2 signals a positive start for the Indian market. Crude trades around $84 a barrel after 3 straight weeks of gains as concerns over further rate hikes impacting demand offset expectations of tighter supply due to the OPEC's production cuts. A spike in COVID cases prompts new guidelines from the BMC for Mumbai City. It makes masks compulsory at government hospitals and will review the status of essential equipment and oxygen plants along with conducting preparedness drills. The corporation has also appealed for senior citizens to mask up while stepping out and call for higher testing. And Ukraine's deputy foreign minister calls on India to play a greater role in stopping the war triggered by the Russian invasion, urges India to invite Ukraine's President Zelensky for the G20 summit. This is the first visit by a Ukrainian minister to India since the start of the war. Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are all of the top headlines that we are looking at. There's lots to talk about clearly, but first up, let's just go through everything that's going across in the world of global markets. Like we pointed out, it's been quite a mixed kind of close for Wall Street. We did have a very volatile session, managed to end pretty flat like we were telling you. But in Asia, you're seeing a pretty good start this morning. So, it's looking pretty solid across the board. Kospi leading the gains this morning. So that one is up over 1%. You also have Hang Seng, which has moved up in the past few minutes, 1.2% higher there. Taiwan is trading with a gain of 0.3%. So looking quite good across the Asian markets. The SGX Nifty also signals quite a positive start for our own markets. No big move there, but it is around 30 points higher. It has again moved up a little bit in the past few minutes, but 30 points higher is what we have on the SGX Nifty. After we did get that pretty flat close yesterday, we did have the banks which closed in the red. So perhaps we'll start in the green, but let's see how we move from there. That's what's happening in Asia, but let's also talk about Wall Street now. After the long Easter weekend, Wall Street opened up. The Dow Jones gained around 100 points at the close. The S&P 500 was up just marginally. You can see, just around 4 points in the green to end the session. And the Nasdaq Composite ended absolutely flat, just a minor red tick over there. But, there were individual tech names, the likes of Apple and Alphabet, which did see pretty severe cuts. So we have CNBC's Julia Burstein is here to bring us a wrap of all of that action from the U.S. markets. Julia.
Markets were mixed on Monday as investors await key inflation data. The Dow closed around 100 points higher, shares of Caterpillar bolstering the index. The S&P finished 0.1% higher, and the tech-heavy Nasdaq ended slightly down. Shares of Booking Holdings led that index lower. Tesla announced its 5th price cut since the start of 2023. This comes as the United States prepares to adopt tougher standards for electric vehicle tax credits. Tesla's up nearly 50% this year, but some analysts have warned that the move could put Tesla's profit margins at risk. Pioneer Natural Resources stock jumped after a Wall Street Journal report that ExxonMobil has held informal talks to acquire the fracking giant. Exxon shares fell slightly following the news. Shares of major theater chains, including Cinemark and AMC Entertainment, soared on Monday following the success of the Super Mario Bros. Movie. The new film from Universal Studios has grossed more than $200 million in the U.S. and Canada alone. That's what's happening here in the U.S. Back to you in Mumbai.
All right, Julia, thanks a lot for getting us all of that action from Wall Street. But moving on, consumers are also getting more pessimistic about inflation as well as their access to credit. This is according to the results of a monthly survey released by the New York Federal Reserve. So respondents expect prices to rise by 0.5 percentage point. This is for the year ahead. CNBC's Steve Leisman wraps up all of the highlights from the Fed survey.
Fed New York survey of consumer expectations showing a surprising increase in one-year inflation expectations, something watched closely by the Federal Reserve, up 0.5 point to 4.7%. We had been coming down for about 5 straight months. Now, it's a little bit better when you look a little bit further out. And to be fair, the Fed looks a little more at these time periods where the 3-year inflation expectations was up 0.1 and the to 2.8%, and the 5-year declined 0.1% to 2.5%. But that 1 year, a surprising increase. Now, what's even more surprising is when they asked about specifics, the survey respondents saw inflation expectations declining for gas, food, medical care, and rent, though college costs were seen rising. Apparently, they saw other costs going up. Earnings growth expectations unchanged at 3%. That'll be good for what the Fed wants to see. And the perceived probability of losing your job down 0.4% to 11.4%. So more indications in that part of the survey, guys, that the job market remains tight.
All right, Steve, thanks a lot for getting us all of the highlights of that survey. But let's also bring you some important comments. This comes in from New York Fed President John Williams, who said that Fed rate hikes were not a driver of a financial system, of the troubles that we're seeing in the financial system, and that the issues at the two banks were unique in nature and unlikely to reflect broader trends in the system. He also added that we haven't seen any kinds of clear signs of credit conditions tightening yet. So those are some important comments coming in. But with that, here's also a word from Mohammad El Arian. Listen in to what he had to tell us.
In the last 2 days, for example, the 2-year has gone from around 360 all the way back to almost 4. In the last month, the range has been 150 basis points. This is a 2-year. This is a rate that's supposed to be anchored by Fed expectations. So the bond market itself is trying to figure out where to go. And we've now discovered what I feared for a long time, which is that prices no longer signal as well as they used to because of the amount of distortions that have happened to the fixed income markets. So my view has been that there's no reason that we should fall into recession other than getting another Fed policy mistake. But if you look at the economy, I mean, look at Friday's jobs report. It had what people want to see: solid employment growth, higher labor force participation. That's good for both the demand and supply side of this economy. I think we can avoid a recession.
A lot of the labor market indicators and the ISM data came out much weaker last week. It was just payrolls that surprised us and got us all a bit worried about the Fed having to go one more. I sort of subscribe to that view. I think there is one more in this Fed. I think the level of inflation at 6%, probably dropping to the low 5s with the good drop off in past numbers out of the time series. I think that's going to be enough to keep them nervous. 5s and 6s are not numbers they want to see on headline CPI or core CPI. So I think if they get a chance, they'll do another one just for safekeeping, and then we'll be in pause mode and get to see what happens with the data.
I think the risks are increasingly on the side of over-tightening, that the misstep here isn't the Fed not raising rates enough to quell wage and price pressures, but over-tightening, raising rates too much and undermining economic growth. Given that the balance of risks and just given where all the trend lines appear to be pointing with regard to jobs, with regard to inflation, and still the considerable amount of uncertainty with regard to what's going on in the banking system, financial system more broadly, given these high rates, feels like this is the right time to just take a pause, take a look around. And if I'm wrong and, the economy remains stronger, inflation more persistent, the Fed can start raising rates again later in the year.
All right, that is some important opinion that we're tracking, and that's everything that we're looking at globally. But let's now talk about the individual domestic cues that you should track, as well as all of the individual stocks that could be in the news today based on some news flow. So we have our research team here with the trade setup. Rima, Mangalam, as well as Surbhi are all here to take us, through the trade setup and prep us up for this trading session. Rima, let me come to you first. We were just going through the global setup. The SGX looks positive for now, but take us through everything we should watch.
Thanks so much for that. So the SGX Nifty is suggesting a slightly higher start. But remember, yesterday, the Nifty almost went up to levels of 17,700. But selling pressure came in the second half of the trading session. And by the end of it, we closed with modest gains. So there is some fatigue which is, creeping in, or the pace of rallies has now slowed down to some extent. So for the momentum to build up on the way up, the Nifty needs to conquer yesterday's intraday high, which is almost at 17,700 mark, or 17,750. And then the bulls will get some confidence, because yesterday was a quietish session. Again, in terms of the global cues, in Wall Street overnight, as you've been pointing out, they managed to eke out gains by the close of trade, but again, not much to propel us significantly higher. There's not too many data cues to react to today. All of them are actually lined up in the next couple of days. So today we'll talk about the Chinese CPI inflation data. Tomorrow you'll get the India CPI data plus the US CPI data. We've been talking about the IT earnings expected from TCS and Infosys over the next 2 days. The good part is both the FIs and DIs were buyers in the cash market. The FIs bought more than 800 crores, 882 crores in the cash market yesterday, buying for the 7th consecutive day, while the DII snapped a 3-day selling streak and finally bought about 352 crore. So institutional activity and volumes were on the positive side. So the setup right now is positive. Again, no negative cues, global cues for our markets to navigate in early morning trade. But it's just, at least yesterday, markets were lacking energy. Let's see now with as earnings and news flow picks up, markets can go higher. Back to you.
All right, Reema, thanks a lot for getting us all of those cues. Let's also talk about the individual names that could be in focus in today's trading session. Surbhi is here with that entire list. Hi, Surbhi.
Good morning. So first on my radar is Bank of Baroda. The company reports its Q4 provisional numbers for the first time. Their deposits are up 15% on a year-on-year basis, and the global gross advances are up 19% on a year-on-year basis. Fusion Microfinance, their disbursals are up 13%, and the borrowers are up 30% at 35 lakhs. Trident, they report their monthly business updates where their bath linen and yarn production both are down 2% and 21% on a year-on-year basis, and the bed linen production, that is up 8% on a year-on-year basis. IRB Infra, their March total collection was up close to 21% at 370 crores. Shilpa Medicare gets a US FDA approval for its arthritis drug Apremilast. And lastly, Neogen Chemicals, the company signs an agreement with a Japanese-based company, Ionic Solutions Corporation, to acquire manufacturing technology license to produce electrolytes in India.
All right, Surbhi, thanks a lot for taking us through that entire list of stocks. We are going to watch for these in today's trading session. Finally, it's over to Mangalam, who's tracking all of the cues from the futures and options space. Mangalam, good morning.
Good morning. So let's start with the cash market flows. Both the FIs and the DIs bought in our cash market, and for the 7th straight session, we saw the FIs buy in our cash markets, and as a result of which, in just the last seven trading sessions, the FIs have bought 5,600 crores, and that's supporting the market. In fact, the SGX Nifty, while it's indicating a positive start, the bigger positive is that it's not falling. We are finding support at lower levels, and that's enough for shorts to cover their positions because of the massive amount of shorts that we've seen from the FIIs itself. And that's what played out yesterday too. If you notice, the open interest on both the Nifty as well as the Nifty Bank came off. The Nifty premium actually increased from 45 points to 57 points, and data confirmed short covering as well. The FIs bought about 1850 crores in index futures. 2,900 long contracts were added, but more importantly, 1,800 short contracts were covered as well. As a result of which, FII long exposure, which was 18% yesterday, has now jumped to 20%. But importantly, it was the Nifty where we saw a lot of long addition and short covering. The Nifty Bank still remains weak. Why do I say that? Because now the NSE is giving data for both the Nifty as well as the Nifty Bank futures. Out there, they bought about 2,004 crores in Nifty futures, whereas in Nifty Bank futures, they sold about 155 odd crores. In index options, there was more call selling than put selling. That's telling you that maybe at higher levels, we will find some resistance, just as we did yesterday as well. 17,700 call, premium of 35 rupees, telling you levels upwards of 17,730 may find some resistance, but strong support seen around that 17,550 mark, and that's largely because of the 17,600 put, which sees a fair amount of writing as well. And between 17,500 and 17,550, we have both the 50 as well as the 200-day moving average of the Nifty. Important support there. For the Nifty Bank, which is underperforming, what is the support that you should be watching out for? 50-day moving average, 40,600. That's likely to hold out. But all eyes will be on the IT index as we have big IT earnings starting tomorrow.
Oh, absolutely. That's what we've all been talking about. Mangalam, thanks a lot for taking us through all of those cues. But with that, it is time for our first short break on the show. When we come back, Ukraine's Deputy Foreign Minister calls on India to play a greater role at the G20 to end Russia's invasion and urges India to invite Zelensky for the G20 summit. We'll bring you all of the details on the other side. Welcome back. You're still watching Power Breakfast. Here's an important conversation. Ukraine's Deputy Foreign Minister Emin Zaparova is in India on a 4-day visit, and it is the first visit by a Ukrainian minister ever since the Russian invasion in February of last year. So she told my colleague Parikshit Luthra that Kyiv wants New Delhi to play a much greater role in the Ukraine issue and intensify dialogue. So let's listen in to a slice of that conversation.
India's global role, especially with regards to the presidency in G20, with regards to the influence in the global south and sharing experience for the global south and being a leading country for the Asian, African countries, is important to also not escape discussion about Ukraine. India should play a greater role globally, should play a greater role in Ukrainian issue, and we believe that the first step towards it is the intensification of political dialogue on the highest level, and this visit is the first step towards this.
All right, that is the word coming in from Ukraine's finance minister. But moving on now, Commerce Minister Piyush Goyal is currently in France to mark 25 years of the end of French strategic ties. Speaking to CNBC TV 18 Sanjay Suri, the Commerce Minister said that both countries will now have stronger ties and that India and France would see a greater exchange of trade and investment. Here are some important snippets of that conversation.
Well, the possibilities are endless. We are working with friends in France on furthering this strategic and defense partnership. We are looking at technology in a variety of fields. There's investment flow both sides. There's a large potential for tourism between the two countries. And trade has been growing very, very fast between France and India. It's a country that respects art, culture, tradition, family value systems, and India has a lot to offer in each one of these. And the series of meetings that have been lined up over the next 2 days give me the confidence that this partnership has tremendous potential going forward.
Can we look at an extension of this partnership another 25 years?
Well, I do believe that France and India are natural friends, natural partners. We trust each other. The people of France and the people of India have an affinity which goes back years and years. I would believe that in the next 25 years, we should see this partnership blossoming to one of the defining partnerships that India has with any country.
What are the areas of trade where you see particular potential?
Well, in every bit, whether it's textiles, whether it's foodstuffs, whether it's handloom and handicrafts, whether it's technology, high-quality manufacturing, whether it's services side, the IT infrastructure, whether it's tourism, I can just banking, accounting, architectural services, design.
Are we seeing
elements of this partnership are very multifarious, and the persona of France is so multidimensional, and India has all of that to offer.
Are we seeing potential here or movement?
We are seeing both. There's huge potential and the movement is really swift.
And investment, do you see particular scope for more French investment in India, and in what areas?
Well, we have the world's richest person today in France. And I think I'm meeting LVMH also tomorrow. There's investment flowing in from France to India. There's investment coming from Indians also to France. So I think it's a two-way investment cycle, and that's the best way because that's what expands a relationship. And with the growing trade, investment is bound to follow.
All right, that is the word from Piyush Goyal on the Indo-French ties, saying that two-way investments are on a rise and that there's potentially a big jump in trade also that we could see between India and France. But with that, we are going to get into a break on the show. When we come back, we're going to track all of the cues from the commodity market, so stay tuned for that. Welcome back. You're still tuned into Power Breakfast, and let's talk about the commodity space as always now. Manisha is joining us with an update. Manisha, good morning. What are you tracking today?
Pavitra, thank you for that. After 3 weeks of gains, the crude prices seem to have come under some kind of pressure, and this is after the U.S. jobs data as the markets take in that. Markets also are waiting for the OPEC and the EIA monthly reports that come into this week as well. That would give you a better stand on what the next month looks like, and the markets will take direction from that. It is the metal space which is more worrying because you've seen almost every metal decline. Copper now is trading below $4, which is a 3-week lows for that. There are now demand concerns coming into the market. And also with the US dollar coming off its recent lows, that is putting pressure on many of these metals as well. So not just copper, you still have zinc trading at a 5-month lows. Iron ore prices are extended decline. Steel also continues to see further decline into the markets. The My Steel data shows that even as the production for steel has declined by 1%, the consumption has fallen by 7%, and that's weighing onto the markets right now. But the soft commodities are doing quite well. So whether it's rubber trading at a 2-week highs, raw sugar prices globally trading at a 6.5-year highs, even the palm oil prices have turned around. So the agricultural commodities seem to be getting more price attraction.
All right, the agricultural commodities seeing a rise in prices, but metals and crude coming off the highs a bit. Manisha, thanks a lot for taking us through all of that action from the commodities. But with that, let's also bring you the latest on the COVID front. The country reported nearly 6,000 new cases of COVID. This is as of Monday, while over 3,400 recoveries were also posted. Maharashtra alone has reported nearly 800 infections, and of this, 221 cases were just from the Mumbai region. The BMC has now issued a fresh set of guidelines in order to contain the surge in infection. So it has made masks mandatory at government hospitals and has also appealed to senior citizens to mask up while stepping out just as a preventive measure. Hospitals have also been instructed to review essential equipment and audit oxygen plants and also conduct drills to check preparedness levels. In fact, instructions have also been issued to ensure higher testing across the city. So those are some measures and guidelines that the BMC has put in place, considering that we do have COVID infections which are on the rise. So that's something that we're tracking, and we'll keep bringing you the details on that. But with that, here's some more tragic news that we're getting, and this is from the US. 5 people were killed and 9 others injured after an employee opened fire in a bank in Louisville, Kentucky. According to the police, the attacker live-streamed the incident on Instagram. The officers fatally shot the attacker. The victims of the attack were aged between 40 and 64. While 3 of the injured victims were in critical condition, 3 others were discharged. Right, so that is some extremely unfortunate news coming out of the US. Yet another incident of gun violence that we're seeing in the United States. But with that, we are going to wind down on this edition of Power Breakfast with the news that most Asian markets are well in the green. The SGX Nifty indicating a positive start, around 30 points higher there. Thanks for tuning in. We have Bazaar Morning Call up in 2.